we are gearing up for a panel discussion. Before we proceed to the discussion, just a few things. One, of course, we continue the pattern that we started last day, where we will have a QR code which can be scanned, and that will take you to a WhatsApp account to which you may post your questions. I think Android users are finding it a lot easier to do so. It will be great if you could stick to the same pattern. If you're facing any glitches, maybe then we could move to the physical way of our question and answer session, just what we did today. But otherwise, it will be great if we could, integrate technology seamlessly into our discussions here. So that's one thing. And again, now that we are furthering the horizon of a digital world, we thought even we will bring in another element of digital technology in our session. The photographs that are clicked today will be sent to your email ID or to your phone number once you scan another QR code that is placed right at the entrance. We have a stand with the QR code. You only need to scan it. That will take you to a page where we have a very brief registration process, filling in your name, your phone number, your email ID, and clicking one selfie. So that selfie will capture our face, and then with technology, wherever our face is clicked in the venue, that picture will be identified and will be sent to you. We want everything now. So we thought, let's do that as well. That's just one gentle reminder. Do make use of that service. The QR code is right at the entrance where we have a stand placed. That is for the photograph. The Q&A QR code, of course, we'll have the volunteers bringing it along to you. Those who attended yesterday, you would probably already have the number stored. Otherwise, just ask us. We'll bring the QR code to you. So that's regarding the Q&A. Also, when it comes to managing time, dear panelists, moderators, anchors, we do have a lot of experiences to share, and we'll be more than elated to listen to all those. But somehow, we have many speakers coming down, and we would want to be listening to all of them comfortably, and we would want to be voicing out our questions as well. So we will be earmarking the last 5 minutes of every session for Q&A, for question and answers as an open floor. So moderators, anchors, please do remember the last 5 minutes of every session will be allotted for an interaction with the audience here. Of course, we have the timer placed right here. So speakers, moderators, you can keep tabs. You can be mindful of how time is ticking down. We have the clock right in front of you. And also time to give a shout out to those who made this event possible with their generous partnership with us. TiEcon 2022 is powered by HSBC. Our knowledge partner is KPMG, and incidentally, the session to follow is also going to be helmed by somebody from KPMG. And our gold sponsors are KSUM, KEF, Muthoot, IBS, Cancor, and Group Miran. Silver sponsors are KSFE, ESAF, KIMS, KIED or KBIP, KSIDC, Lead Squared, KMTC, Suntech, and our supporting sponsors are Open, Ace Money, Manilas. The gift sponsors are Elite, ITC, TRR, Double Horse, Synthite, Dhatri, Baifa Ayurveda, Jacobi Chocolatier, and Heal. So again, we'd like to express our gratitude to all the partners who have been our constant companions in this journey. With this, I welcome you all to be part of our first panel session for the day. Our panel discussion will be moderated by somebody who is impassioned in the world of technology. He is the Technology Leader South, KPMG in India. He comes with an experience of almost 2 decades in various sectors covering manufacturing, financial services, automotive, telecom, education, IT services, so on and so forth. So, he oversees digital enablement for BFSI and also operates as office managing partner in Kochi, and therefore who better than Mr. Vishnu S. Pillai to discuss unlocking innovation in BFSI digital ecosystem. And now I leave the floor open to the moderator and the panelists here. Over to you, sir.
I specifically told folks to just read out probably a couple of lines, but thank you for sticking to that script. Very happy to be back at TiEcon. I remember a year ago, we were probably just coming out of COVID, and the hall was full. And when I came in yesterday, I said, maybe we'd be lucky to find at least as many people as last year. And I found double the number of folks. So indeed heartening to see this amount of response for something that's digital, for something that's innovation-led in Kerala. A big shout out to all of you and to TiEcon, and special thanks to TiEcon for organizing something at this scale. I'll be at the TiEcon Summit in Hyderabad as well. I'm the Thai Summit in Hyderabad as well, and I'm sure you guys are going from strength to strength. So all cheers to you. Thank you so much, Saquib. Thank you so much, Vishal, for taking this opportunity to come across to TiEcon in Kochi. Saquib, of course, is the CTO, Chief Technology Officer of ESAF Small Finance Bank. And Vishal on my extreme left is the founder of WeRize, a very fast and upcoming fintech working in the area of microfinance and lending. I can't start this conversation without a quick observation. So if you look at the standees on your left, you'll find Mr. Paul Thomas having been awarded as the Emerging Entrepreneur of the Year in 2014. And within 2 years, I think ESAF became ESAF. And he was awarded as the Entrepreneur of the Year, right? So we have banking and financial institutions right from Kerala, right up there, okay, getting absolute mind share, and that's what we want. So as KPMG, we're working with a lot of small finance banks, payment banks, and of course the larger banks. And the amount of enthusiasm that we are seeing in digital and innovation in terms of the money being put on the table for doing absolute standout projects is truly inspiring. We don't see that amount of enthusiasm in any of the other countries that we work with. So India is indeed rising and shining. So with that, I've got a couple of questions, and I know mindful of the time, I'll probably, the way we'll run this is I'll ask the question and both of you can probably give your opinion, and then we'll have some time for the audience as well. So the first question is, hearkening to something that I had said maybe a minute ago, in terms of technology and digital. Of course, Vishal, you are a founder. So, and Saquib, specifically, maybe to you first, is technology and digital investment on top of the CEO and the MD's agenda today?
Good morning. Good morning all. So, obviously true. Without technology, you cannot even drive, you cannot walk a single step now. It is so imbibed in the day-to-day functioning of people, and so as in all the sectors where we all are working with. Banking surely is all technology driven. And if you look at this, is the prime focus for all the banks in India to have a good technology stack to run the systems. It is very surely in the minds of all the CEOs. It is the prime, most of the discussions which I have, almost all the discussions, I am part of many of the meetings and the panel discussions, internal discussions and to the board. The most important questions comes on technology itself. How do we drive that? And that is very, very important focus of not only the CEO, but also to the board. So they are so curious to know what is going on, and they are ready to spend also. The larger amount of spend is now on technology itself. And maybe some of the banks, 8% of the total spend is only on technology itself.
And over to you, Vishal, a similar question. I know you are pretty much the person who's spending the money.
Yeah.
So how important is digital for you?
I mean, that's the core, right? So, but we use digital in a little different manner as compared to rest of the fintechs. So most of the fintechs are like pure digital, and the segment that we focus on is not a segment that will completely move to digital anytime soon. So just some clarity on what we build. So we are building the largest fintech platform for the middle India. So your people living in tier 2, tier 3, tier 4 cities. So we see India into 3 parts, India 1 to 3. So India 1 is your tier 1 city, millennial, Gen Z folks, the taxpayers, 4-5 crore taxpayers, that's India 1, 50% of GDP. Then India 2 is your middle India, lower and middle income customers, primarily living in the smaller city. And India 3 is your core microfinance. So we are not in the traditional microfinance, and we are not in the traditional India 1 millennial Gen Z focus, which most of the fintechs have. So our focus is the middle India. So we are a 3-year-old company. We have raised around $26 million, valued at $120 million, growing fast. We have customers in 2,000 cities right now. But the way we reach these customers is a little different. So our customers in this middle India, they will not trust working with like a financial provider if they're a pure digital player. They will not be like willing to provide their documents, or they will not be willing to buy. The model that works there is the LIC model. So we essentially piggyback on the LIC and the similar freelancer networks. And we create products that are meant for, so we are a full stack play. We create products that are meant for this segment of customers across lending, insurance and savings. We do have our own NBFC license, while our balance sheet is lesser, but we work with other banks and NBFCs to co-create products and do risk sharing based arrangements. We also have some insurance based products. We are getting into neobank and saving products. And then these freelancers are the ones that actually sell these products. Everything is digital. So there is a freelancer app, there is a customer app. Freelancer acquires customers, then the customer has to download the app, and then the journey with the customers go there, right? So it's a phygital kind of a model. So our whole existence, is based on, enabling like a physical kind of a touch point for our customers, because pure digital does not work, but doing it through technology. So there is no paperwork, no cash happening. And the cool thing about our platform is that while we have freelancers in 2,000 cities, more than 10,000 freelancers in 2,000 cities, we have 0 feet and street or branches of our own to acquire, train, or manage. So if you look at LIC or any of the similar companies that run BC networks and all, they have their own teams and their own branches in each and every city, where they train, acquire, manage these freelancers. And that model we have used, but we have 0 presence anywhere except that Bangalore office. And we are able to provide financial services to customers in more than 2,000 cities without any physical presence of our own. So yeah, so we have used technology and our platform to enable financial inclusion for this highly underserved segment in smaller cities, but making it super efficient. So technology, so when you talk to fintechs, a lot of times fintechs tend to forget that finally in financial services, you can do just lending, insurance. The business is only 3-4 things, right? Lending, insurance, payments, or maybe wealth management. Technology is an enabler. Technology is a way to basically do the same thing, delivery of those 4 financial products in a better manner. That's all. So yeah, it has to be core now.
Yeah. So what I'm hearing from you, Vishal and Saquib, both is maybe 10 years ago when we were all in the industry, IT was an option that people chose to invest in if they had the time and the money. Today, technology is the oxygen that's enabling our digital customer journey. Without that digital customer journey, you will be probably overtaken by folks who are faster, nimbler, and maybe even smaller, because disruption and innovation can happen anywhere in the value chain, right? Another question, and we can probably go with Vishal first, is what is the next big problem in financial services that is actually waiting for a solution? I know we spoke about this, Saquib, and you said, yes, I have a couple of thoughts on that, but maybe we let the fintech go first.
I think what we are trying to do is that, right? Essentially, what's happening is India, with these 4-5 crore people, have too many choices. Like all your big banks, fintechs, everybody wants to build for them. So that 5%, 6% population is 50% of India's GDP, and everybody is just going after and attacking them. India 2 and India 3 is your traditional microfinance. I will even say India 3 also, there are a lot of players now with government supporting microfinance and RBI pushing for microfinance. There are a lot of players in India 3 also. Now India 2, what happens is, while these people do have a bank account, somebody earning let's say 10,000 to 20,000 in a small city, they do have a bank account with a PSU bank. The products that they do not have are like, they do not have a credit card, they do not have an unsecured loans. Like PSU banks, their main business is to take money from the masses and give to large corporates as loans. That's the core business. Like if you want to take a card from, like SBI has like 50 crore customers and 1 crore credit card customers, right? So there is this big gap, which is, typically BCG calls that the missing middle. So we are going after that missing middle, which is 30% of India's GDP, but spread out in like 20-30% of India's population. And the right financial products meant for those customers with the right delivery method using technology. That's what we are trying to build, and we feel it's a multi-billion-dollar opportunity, and that's what we are trying to solve.
Great. And
I have a little different perspective to say. We have always been focusing on first, second, third layer. The biggest layer is the rural segment. And these rural segments always transact in cash. They are always, they don't have the power to actually go digital. If you look at a small rickshawala, I always give this example. If he wants to buy a bread, he is pulling a rickshaw and he wants to buy a bread. What he will do is he will take out 10 rupees from his pocket, stop at the shop, take the bread, eat there and go. Now just for him to become, to enable him in technology, what will happen? He will have to have a phone, he will have an account, and subsequently the other side of the seller, who is a small chaiwala, will also need to have such the other side integrations. Now, the biggest innovation which I think waiting is in the cash space. Now, what will replace this cash? And that will be the biggest innovation which will come. I think that way. Because the ease of cash, it is not that the value of the cash, it is the ease of cash. What will replace the ease of cash will be the next big innovation which I think will surely come in near times. Second is the rural market. If you look at the prominent thing which is missing with these is the insurance. The insurance is the next big thing. Then insurance will be the next big thing which will happen in this rural sector. If we focus on this rural economy, mostly banks, if you look at large, the small finance banks, they are mandated to do that. They have started. We are doing this to the last mile, selling the insurance product, giving us small ticket size loans, just to enable them. They are taking out money in cash, though we give them an account. But slowly the habit of inculcating the habit of saving and using the financial products is bringing them to the limelight. This, I think, probably from my view, is the biggest innovation area which I think somebody will come up with this, some idea to fill this gap.
Perfect. And open question to both of you, and that is pointed towards Saqib's first point with respect to what will replace cash. I know sometimes we run the risk of looking at a rural problem through very tier 1 eyes, right? Tier 1 city eyes. Crypto karte hain, chalo, crypto. That's not the answer, right? So do either of you probably have an indication of where that answer could come from in terms of what could replace cash, targeting at your layer 2, layer 3 segment?
You know, by the way, just on the previous question, you know, like because you asked like what is the biggest thing to do be in India, given where we are as a country, like there are too many, lot of those things that are, you know, big opportunities, right? So there are opportunities everywhere. The opportunity that I mentioned is a huge opportunity. What Saquib mentioned is also another huge opportunity. Now coming to that particular thing, I think finally that's where the UPI and all is eventually going to go, right? Like the whole point of the Jan Dhan accounts and all was to get these people into habit. Now what happens is, so what's going to happen in India is India 2 and India 3, what's going to happen is as India becomes China, a lot of the people from India 3 right now, which are the rural, poor, uneducated, right, as India becomes, let's say, you know, a $10 trillion economy, maybe in the next 10 years, a lot of people are going to move up the chain and go to India 2. Most of our customers 10 years ago were in India 3 poor people. But now it's the first time they have a job. Let's say somebody's a sales guy working in a, you know, FMCG company, somebody might be a teacher in a small school, right? So as India becomes progressively richer, so 10 years ago India was a poor country, GDP per capita, then it became like a lower middle income country. China is a upper middle income country. So as the country progresses, people get educated, they will get more and more comfortable with the digital infrastructure that our government is doing a phenomenal job on, and that's going to be a natural progression. That's what my opinion is.
Perfect. And I'm just going back to the previous speaker's session, ONDCs. That's something that we all aspire to support, and it's a great thought that, you know, something thought of in India is being made in India for Indians. Now, one of the questions or one of the points that Nitin made was with respect to mobile number portability, right? So in terms of innovation, this was something that was probably not thought of, but, you know, it's of huge value to all of us. Even I have probably ported my number from one carrier to another maybe 3 years ago for convenience's sake, and I enjoy the luxury of having the same number. So innovation, I mean, a far out thought is, I mean, have you thought of, say, bank account portability? So.
Exactly. I was just about to say, and you took my words. See, why should I have multiple bank accounts? There is a regulatory angle to all these things. The more the accounts is, the more the account you have, the more number of money, or you will be siphoning off the money in your account. But it is not that. If you look at, if you have one account with one bank, you don't want, you have shared with multiple systems, and you want the service of the bank is not good. You want to move out from that system and move to another bank. So the option should always be there. Though not this will also come up. This is surely in the pipeline of regulatory authorities, and they are also thinking on these lines. The same number will start. You look at when Aadhaar came, there were talks that why not Aadhaar become the account number of the customer. So any money you want, any subsidy, now if you look at government giving subsidy, it is to the Aadhaar number itself. That means the identity of the customer and the account is also Aadhaar. Though it is linked to an Aadhaar account number at the back end, but surely this will come up, and this is a very important area which maybe a larger audience will start thinking about that.
And we have some questions coming in. First to Vishal. Considering that your model runs with freelancers, how do you ensure consistency of experience to your end customers?
Sure. So we have two apps. One is the freelancer app, and then there is the customer app. So the freelancer, let's say he's an LIC agent, he already knows, folks that he has sold LIC to, and now he wants to sell one of our, let's say, lending product or some insurance product or a saving product. So he or she will, there are multiple ways for the freelancer to acquire customer, but one of them is just simply creating an application on the behalf of the customer. But once the lead is generated, the customer has to download our app. And every customer who has to take a financial product from us has to download our app, which is in the regional language of the choice of that particular customer, and give us the consent, and then the entire journey, KYC, everything happens on the customer app. So that's what kind of ensures, because what we don't want is a scenario where the freelancer does everything for the customer, and that's where the frauds and all those will happen. So because the customer has to download our customer app, the frauds and all does not really happen, because that has to be on the phone number that is linked to the national ID, Aadhaar, and that's where the KYC happens on the same phone number. So, and finally the customer has to go through all the terms and conditions and give us the consent. So that's our way to do it.
Right. And you are, like you said, WeRize is a phygital platform. ESAF was a traditional bank that is adopting digital means of working very, very quickly. So I'm guessing both of you would come somewhere in the middle and start interacting with each other, maybe on an ONDC network, I'm guessing. Question to Saquib that's come in is, again, to your specific points, becoming a popular point, would something like an e-rupee replace cash, and would that be viable for the masses?
See, e-rupee, digital rupee will surely take up a large space, but if you look at cash, how does a cash work? It is just the ease. You take out, give it to people, take it, but there is a risk involved. The ample amount of risk you carry along with the cash in your pocket is something. So now that something will come up. So there are people who are thinking this line. We are also thinking, but there are experts, there will be fintechs, there will be startups, and I know there are very hardcore guys who are putting their brains behind this. We'll start working and find out something for that. But digital rupee will surely take up, and it is also a very good thing. The initiative, let's appreciate the government also. It is a step-by-step approach, very slow and steady approach we all are going towards, and the progress is very smoothened. There is no to hurry to adopt any new thing which will come up. It is not forced upon to anybody. So that is how it is going, and natural adoption is the best, as far as I understand.
So I might be actually finishing a project on time after a long time. I've probably got a couple of minutes more. So I mean, we are at the end of the formal number of questions that I have. I can probably open this up to the audience to ask any questions, so that we are still within the 25-minute slot that we have. If you have any questions, please do raise your hand. I am all out of questions on the tab. Please feel free to ask me questions, or I have a couple of my own, which will take more than 5 minutes and keep my average up. Okay, so I'll ask the question. So, Vishal, your particular business model was not, I mean, you would have been probably thinking about it 10 years ago. you didn't have the technical means to actually make it happen. But if you look at, say, 2030 or 2032, I know it's probably too far away, but what is the far out thinking that you're probably thinking of today? And the same thing to Saquib, in terms of the business model, particularly for small finance banks. 10 years from now, where do you think that will get to?
So for us, we are a full stack platform where we partner with other banks and other NBFCs and other financial players who are primarily, most of them India 1 focused, and become the doorway to India 2 for all of those. So example, like we are integrating with HDFC and some of the other banks right now. We are already live with large NBFCs. While we do have an NBFC license, we do co-lending and those kind of stuff. So what we want to be at least 10 years from now is the largest player for India too, right? And partner with other providers, because it's very costly for an India 1 focused HDFC or somebody like that to open branches in smaller cities. So we say that using our phygital model, we will give you customers, we will acquire customers for you, we'll underwrite them for you, we'll collect for you, and we will even risk manage, customer service, everything we'll do for you, and you just work with us. That's the core value proposition that we build, and we will co-create products across insurance and affordable housing and stuff like that. And the way to reach these customers is going to be our freelancer model only, right? We expect to be much larger, much larger than what we are right now. That's what we expect, and have like more and more financial products. And just want to add on the point that initially was raised, but I could not add my point on. So it would be a brilliant idea for people to be able to port their bank accounts, but maybe a little impractical from like regulatory perspective. But what RBI is trying to do is at least the information about somebody's bank account, right, through the account aggregator.
The metadata.
That's what matters.
The metadata.
Yeah, the metadata. That's what matters. It's not like I have the money in this. They have made it very easy for money movement through UPI.
For doing segmentation.
Exactly,
and stuff like that,
right? That's the whole point, right? But with account aggregator, now you don't have the data anymore only with you. Right. They're trying to kill monopolies, right? Which is the right thing to do.
Absolutely.
Right? So that's, I think there is a huge step already taken in that regard. Nobody cares whether the money is today with
Correct.
me or like how easy is it for you. If you don't like the bank, then you should be able to port quickly because you can move the money. But the information about your behavior, that is, in your transactions, right? Any bank or any fintech should be able to see. And that is the whole point of having a bank account, right? Yeah. So that is already solved and getting solved now pretty aggressively.
Great insight. And Saquib, maybe to you, in terms of where you see your segment going.
As a small finance bank, I see a very huge potential for the growth in the country. They are catering to not only to the tier 3, to the tier 4 also. That means and to the deep rural segments also. Expansions are very great. All these small finance banks have expanded to a very large extent. The moment they became banks, they had some challenges, but they overcame all their challenges, and now they are reaching greater heights. Look at the growth of all these small finance banks. They are almost doing 20, 25 to 30% growth every year on year. So that is a very good sign. And the customer acquisition. If I talk of ESAF, we have acquired almost 200% more customers than we started. So these are all things which makes a lot of things possible, and technology is one of the driving factors also. Aadhaar and these enablers like Aadhaar and all are very good driving factors. And also the support of the fintechs. So fintechs not only bring knowledge, but they also bring expertise also. Like if you look at the machine learning and the artificial intelligence, the data which these companies are having, and the processing of this information, they are bringing light to which are the segments, which are the core areas to focus on. So that the people, the banks, these small finance banks are focusing on those areas and doing good business. Not only good business, good services also. That is what I think, and ESAF is also one of the brands not only in Kerala, now it is growing a very big way in the northern part of India also.
Absolutely, and what a lot of these small finance banks that we are working with are doing is, while of course they had a lot of JLG accounts as a large part of their lending portfolio, that they are consciously figuring out what to do with that segment. So as they start diversifying into the higher income category areas, right? And of course, to your point, banks and fintechs coming together, even we are working with so many banks today, creating a middleware for fintechs to safely integrate with the core systems of banks, so that the aggregation and the disaggregation of these fintechs becomes seamless. So technology, indeed, going back to the topic, unlocking innovation in BFSI can only be possible with the digital ecosystem, and we are all lucky to have a very friendly regulator, someone who is actually sponsoring innovation across so many areas, right? That's the Reserve Bank of India. So we are lucky to be alive and kicking and innovating in an area where regulation supports innovation. So with that, thank you so much, Vishal. Thank you so much, Saquib sir, for coming across to Cochin today and taking your valuable time to spend some time with us and sharing your thoughts. Thank you so much. And
Thank you for having us.
Thank you very much.
Thank you, sirs, and I request the moderator to thank the panelists by presenting a giveaway. Thank you. Thank you, Mr. Vishal Chopra. Thank you very much for joining us. Thank you, and thank you, Mr. Saquib as well, for reminding how technology plays an important role in the inclusion of the underprivileged and how insurance is likely to be the next big thing. We would also like to thank our moderator. I request Mr. Damodar President TiEcon Kerala, to present a little something to the moderator here. Thank you for posing the right questions and extracting the right answers from the panelists. Indeed, the oxygen of the world that we live in. Well put, sirs. Thank you very much. Thank you.